You know what are the most powerful liquidity pattern to trade on your forex trading? You are constantly bombarded with people telling you so many stories about liquidity here, liquidity there, and whatsoever, and it brings you a continuous confusion because you see liquidity everywhere. But did you know that there are four particular and major type of pattern that you must be aware of if you wanna master the liquidity concept? And in this video today, that's exactly what I'm going to do by bringing you one of the most powerful concept and one of the most premium videos I ever made on my channel by explaining you step by step what are these patterns, why they are important, and how you can take the advantage of them. So without further ado, let's get started. Alright, here we go. We're back again. Let's get straight to the point and let's start. First thing first, you guys can see there are 5 patterns over here. This one is a bonus that I want to share with you guys. Just gonna keep it at the end because I said scam. Why is a scam? Because this is a particular type of concept that a lot of gurus out there are trying to sell you through their courses. And in my opinion, that's one of the biggest scams going on right now. Nobody's talking about, nobody's aware about it. Don't worry, I'll explain it to you at the end of the video, so stay around. But in the meanwhile, let's start with the most important one, which are these 4 patterns over here. So, as always, if you're following me, you know I always tend to answer a lot of questions here listed, as you guys can see already. So that helps you to have a roadmap from point A to point B that will help you to understand literally everything that you need to know, okay? So, let's start with the question number 1. Why everyone nowadays is trading liquidities? Like, why all is about liquidity? What's going on with liquidities? So in a simple word, without making things complex, because I like to keep simple, right, is that people used to trade a lot of so-called retail patterns. Now, don't take me wrong, because even if you're trading liquidity, you're still trading retail, okay? So if you ever hear people telling you, oh, I'm trading like the bank, or I'm trading like this and that, no, you're trading nothing. You're like trading as a retail. There's no such thing as you're trading in institutions or you're trading like the big boys or anything as such. No. However, there has been an evolution of how prices change constantly, the behavior, the traders' behavior, how it changed over time that brought them on shifting from the normal type of pattern, such as this one, to a liquidity type of concept, why liquidity works. So, over the last 10 years, people have been always trading this support, resistance, breakout, or different type of indicators, different type of moving average, different type of whatsoever. So for example, if somebody was trying to take a trade somewhere around here, so let's say they were going for a sell from this specific zone, what the market used to do is the market used to take them out, right, like this, and then what's going on their favor, right? Well, in favor. In this case, without them, of course, right? So when majority of the traders, they started looking at this type of scenario cases happening over and over and over again, and I'm talking 10, 15 years ago, 20 years ago, whatever, people started saying, you know what, we're gonna be slowly shifting and focusing onto this one, okay, this one over here. Now, there is a whole lots of it. I have a huge video on that where I explain on my channel. Make sure that you check that out. But in a simple terms, is a retail, just think about it, they started saying, oh, let's go into this. Maybe, if institutions are here, what are we even doing on this level, on this level, on this level? Let's wait them for take us out. And then what we're going to be doing is that we're going to be going with them towards the desired direction. But that's not the case, because if that was so simple, everybody will be making money now, right? Everybody will be trading. And that's also what nowadays people are calling it as inducement trading, inducement, like so-called inducement or whatever, fancy. But it's just simple liquidity grab, stop hunt, fake out. You might have heard that a lot across many other videos and concepts. So what is actually going on? What is actually happening is that by having people on focusing on all of this, just on the stop, especially newbies or new traders coming into this generation, people started forgetting on these patterns over here, like these main patterns over here. Like, what are these patterns? And that's the reason why many people, they don't understand the liquidity pattern. They are not capable of understanding what are the particular pattern that they should be paying attention to and which one are those, because they never traded this, right? It's pretty much you're trying to trade something without understanding even what happened prior to that, without even understanding how we ended up trading inducement or stop hunt, right? Without knowing why we are even trading that. Are you guys understanding what I'm trying to say over here? Okay, so the question is, don't worry, I'll break everything down, and that's why I made this video for, because in this video it's exactly what I'm going to show you, how you can identify liquidity, the right one, using the right logic, okay? So, is it actually profitable trading liquidity? Now, many traders will tell you yes, because again, why? Because they feel like that trading with the banks, that's how they call themselves, right? It's like going to the right path. So they feel like, okay, if I wait for them, the big boys, to take me out, then I can take a trade like this. However, market is clever as well. It's not only retail behavior that changes, even institutions over time, okay, they change it. Because of course, if everybody stop trading this and start going here, what do you guys think is gonna happen next? Then you're gonna start having this, and then you're gonna have this. So now people are trading liquidity stop hunt, then I'm gonna have even a double stop hunt. You see how things are changing? And then you might have other people that now instead of trading this or this, they all shift in this one. You see, it's always an evolution with everything, right? Even us in a society, have you ever seen anything being same for like hundreds of thousands of years? Yes, we do have certain things, but with time there's an evolution, and the evolution in the market happens as well with this type of concept as well. All right. So here I want to go straight to the pattern, but I want to give you a brief guide, guys, first on this, so then you can understand what's going on over here. Here is why I don't use it much. You guys know, if you are following me, you know that I don't trade liquidity much. I use liquidity as a confluence rather than as a key point for my trading, okay? And the reason for it is because, first thing first, there are so many patterns there to be aware of. But I filtered them down into 1, 2, 3, 4, okay? That are the most powerful one. And secondly, out of the pattern, there's something else as well. For example, previous day highs, weekly highs, monthly highs, session highs. So eventually it comes on a point where, that's what I was saying to you guys, why everything is so confusing. It comes on a point where when you're trading liquidity, you have 1 pattern, 2 pattern, 3 pattern, 4 pattern, 6 pattern, 7 pattern, 8 pattern. Now you got lots of it. And that's why a lot of traders, they get confused because they don't understand what's going on. Why, which one they should be trading, and which one they should not be trading, how they should be filtering. But the reality is that they all works. You see, that's the crazy thing. They all works. However, there are some of them that are particularly important based on certain rationality, and some others are not even important at all. Okay? So why I don't trade it personally is because I love instead order flow and market structure. And the reason for it is because if you just think about it, okay, I'm about to give a light bulb. Market goes only up and down, isn't it? It goes up, it goes down, it goes up, it goes down. So if I can fully master and understand the narrative and the structure and know what's going on, how to take a retracement phase and how to take an expansion phase, how many patterns do you guys think I should be focusing on? Wouldn't be that like 2 patterns only, right? Will it be like 2 patterns only? So about the drawing, let me take this one, okay? Or worst case, maybe 3 patterns, but not anything beyond that. But look at the liquidity one. I just mentioned to you. Here, I'm going to be explaining you about the 4 type of liquidity. And there is also a 5th one that now is running as a scam, in my opinion. And then you got previous day high, previous day low, weekly high. You got many of them. That's why a lot of traders, they get confused, because there is a chaos, is a wild west out there. Like people are just trying to sell you anything, anytime, where possible. So now let's understand, right, the 4 type of liquidity that you are not aware about. And the funniest thing is that I'm not saying they're not aware about. It has always been in front of your eyes, but you never knew how to do an understanding, how to have an interpretation, how to be able to distinguish and say, okay, this is the valid one, okay? Right? So now let's go and bear with me, because once I'm going to be showing you on the chart what exactly we're doing in here, you're going to have a crazy, crazy breakthrough. So first pattern that you must be aware about is the breakout traders. Okay, so what we're gonna do now is we're gonna be reading through the different type of retail trader as us. Okay, I define myself as a retail trader. Okay, we're gonna be defining and see which one are the one that bringing more liquidity into the market. The first one is definitely breakout. What do you mean a breakout? When you see price going up and down, there is a range that it forms, right? You go high, you go low. As soon as you see people taking a break onto the upside, for example, or even the downside, there are traders already with their pending order over here, and then they probably place their stop loss over here or somewhere down there. Okay, so they are the breakout traders. So what happens is that when they enter in the market, right, that stop loss goes straight away under this low within the order flow and the structure. Then we got the next one. Look at this, the reversal trader. What do you mean by reversal trader? They're the one that comes after the breakout trader. So breakout traders literally, they leave their pending as soon as this high or this low gets broken out of a range. Reversal trader, on the other hand, they're the one that wait for price to break this specific level and wait for a retracement. And so then they can enter over here, which is a reversal one. And this is the one that I personally trade as well, because I follow the structure with further confirmation for me to take the trade. So these are the ones that where you can either take it like that with your stop loss underneath it, right over here, and then you can also wait for lower time frame confirmation before you take the trade. This is the second type of liquidity that it comes into the market every single day. Now, if you go to the third one, is a trend trader. What are the trend trader? Trend trader, okay, is a mix between the breakout trader over here, a reversal trader, but the ideology or their opinion is that every time price touches the trend line, so following the trend, right, like here, they're gonna start entering on those levels and putting their stop loss below the previous low. Okay, so in this case, you guys can see what I'm already building over here. There is a narrative popping out over here, so you can take it like this because it touched the trend line, stop loss below the previous low, and whatsoever. And then lastly, we got also trader that even comes before all of these. They are the support and resistance trader, which is the number 4, and they are the equals. Okay, you see, you might have heard a lot about equal high, equal low, blah blah blah, all of this. But why is it important? Is because they sell it from here, the buyer from here, so they start creating a cluster, a range of liquidity within this specific level. Now, do you guys notice something in common on all these parts that I'm showing you right now? You have heard about them, but just see through them because it's going to open up your eyes so much. What exactly is going on is that if you have a breakout trader, you have a reversal trader, you have a trend trader, all of these traders, in somehow, if the price is going higher, their stop losses, all of them, I'm telling you, all of them, most of them will be exactly underneath the same exact structural low. So just think about it. This one, let's start from this one. This one breaks, puts the stop loss over here. Now, shift to the second phase, which is the retracement. So they enter now the reversal trader, they go underneath this. So you got 1 and 2 type of traders now under this low. So you see the cluster is developing. Then it goes over here. So let's say this one. Let's say that this tiny part is the continuation of this. Or let's say that there is a trend line. So imagine, right, just imagine there's a trend line like this. Okay. So again, people are entering there, they're putting the stop loss over here. So right now, under this exact low, okay, this exact low, you got 1 type of retail trader, 2 type of retail trader stop losses, 3 type of retail trader stop losses. And then eventually you got this one as well, support and resistance. So imagine this low is probably this low. So somebody's already buying here as soon as price is starting the support and resistance. So now you got the 4th one as well. Damn it. Do you guys see that? That's what I'm talking about. And that's why I always say to you all that it doesn't matter what type of strategy you use. At the end of the day, we all end up placing our losses, stop losses, under the same exact point and our direction towards the same exact point. Of course, there is also the factor of time frame, because while it's true that now everybody's going for buy, there might be also traders that are selling because they're taking the retracement phase. You guys understand what I'm saying? And then lastly, you guys can see here, there's another pattern. This is getting very viral, and I have talked a lot about it, and I have proved a lot with my videos telling you why this is a scam. This is so called the smart money concept, right? So SMC trap liquidity. Damn it, this is one of the biggest lie I see going on around. Okay, now what is an SMC trap? SMC, all right, as I was saying before to you guys, that those people that are trading this liquidity stop on, they are called smart money concept trader, right? That used to be one. But now you remember when I told you about this, that there is a double stop on and then price goes to the downside? Well, that's exactly what they define now to do this. So basically when you, let's say you got a stop on, damn it, okay. Let's say this low is this stop that's taking liquidity to the left, all right? So just imagine you got liquidity over here, right? Price take out this liquidity, down there, break the structure, then it comes down here, and then from here, price makes again a new high. So that's what they now refer to smart money trap. But in reality, smart money trap has always been there. I'm not going in depth right now because I made a long video. Just go on my channel and check out smart money entry models. I'm going to leave also the reference here as well. And you will understand why I'm saying this is a scam and why you should be paying attention to it. Okay. But now let's carry on our topic, which is how do you use the four concepts that I just shared to you right now with inducement, or no, the stop on. How do you take the advantage of that? The advantage you take, what you should be focusing on doing instead, and let me show you, that's the last one that's going to help you a lot. The advantage is that you need to understand when you see stop hunt happening, like for example, over here or over here, the first question you should be asking to yourself, understanding, is that if this stop hunts over here has actually taken out the relevant liquidity of this specific pattern. So if you see a stop hunt, so let's say the price is over here, right? What is this price doing even here? Is this price combining with other type of liquidity, or is this price high over here is just randomly there and it's not matching with any trend line, any equal high, any reversal pattern, any whatever you want to call it, breakout, right? It's just simply there. If this is there and there is nothing that he's fulfilling, then you know that some figure is going on. Then you know that you can jump on the trade because most of the liquidity has been taken out. Now let me go on the chart and give you a prime example, and then I'll tell you then what you should be focusing instead on these specific patterns. So if we stay on GBP USD and we go over here, right? Okay, there we go. Look, I actually had one over here. Let me show you. Pay attention to this. Is actually a perfect example. Look at this. You see this trend going to the downside, right? You can clearly see that. Then what else do you see? Let me show you this. You have here price starting from this high, because this is the high, the mid, the low. You have this high that breaks to the downside, right? Already there is breaking to the downside. What did I say to you before? Pay attention to it. Okay, let me 1 second stop over here. Look at this. So you have a range over here, right? Do you guys see this range? Cool. It is a particular range over here. Do you guys see that? Okay, price breaks through this range. So you got your first type of trader entering in the market. All right. So over here, you got the breakout trader entering the market. I want you guys to visually see the liquidity. Don't just listen, oh, I call high, I call low. Learn to identify them on the chart using valid rationality, right? Use logic, because that's what helps you to survive in this market, okay? If you have doubt and confusion, you're not going anywhere. Now, what do you guys think comes next? We got break, we got retracement. Now we're going to have what? From the breakout, we're going to have the reversal one. So in this exact place, now you got the reversal trader. So you got reversal, you got breakout, you got also what? Smart money trader, because this takes liquidity, right? You see? Then there's an order block, break the structure. So now you got over here. Sorry guys, I don't know why this is not even typing properly. Let me clean that up. Hold on. All right. So here, then you got the reversal, and then you got the smart money trader, right? And then what else have we said as well? We had different patterns, right? So we've seen on that price action, we had a breakout, we had a reversal. Do we have any trend trader? Do we have any equals? Let's go and see what's going on. Look at this. So yes, we do have a trend trader. Where exactly is the trend? Where do you see the trend? Can you spot that? Look at this. Look at this. There we have it. You guys see? So now here you have also trend trader entering in the market. So where do you guys think exactly price is building liquidity? By the way, you also have liquidity, right? Look at this over here as well. This is support and resistance level, right? Some people, somewhere in the world, that might see over here, you see this equals, tap, 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 might be some support or resistance level, right? So look at the cluster of liquidity on this exact level. Guys, it's crazy. Look at this. Then over here as well, there is a line, right? You see price is trapped within this zone. So then now, interestingly, you can see that all the people that have entered over here, or people that entered over here, by the way, because then this continues, right? You go again, breakout traders, reversal entry, breakout traders, reversal entry. So you have breakout, that stop loss over here, reversal, the stop loss over here, small money trader, the stop loss over here. Then out of nowhere, this price explodes all the way up there, bringing this over here. And here, in a fractal nature, there is equal, there is a range. I guess you guys can probably see it from this time frame. You see, there's a build up. So that means if we go to smaller time frame, let's jump on a smaller time frame. Let me show you this. Guys, if you train your eyes, you understand this powerful concept, right? These tabs, trust me, you're gonna have a crazy, look at this. There is a range, support and resistance. You got breakout traders, you got reversal traders. And then out of nowhere, he comes all the way up here. What is he even doing in here? That's exactly what I was telling you to you earlier. What exactly is he doing in here? Does he have any job? Do you see this matching on creating any trend line or doing anything within this specific narrative they will be doing? No. What he does instead is that he confuses all the people that have entered breakout for sell, reversal for sell, trendline for sell, and now they see all these get smashed through, all of these get broken, structure, everything, whatever broken. So people are like, okay, I think we're going buy. So now all the people that start doing what? Following the buy. We're going for buy from here, buy from here, buy from here. But eventually, this was just a stop hunt. They stopped everybody out, and then they decided to continue going all the way down again. Do you guys understand how important this is and why I'm showing you this? But wait, I'm not done yet because I've shown you this example. But let me show you even better. Wait, 1 second. Now, what exactly is happening over here is that you guys have to understand that market is all about fractal nature. There is a fractality that you need to be aware of. You need to know what is the meaning of being fractal market. Because it's true that in 15 minutes, we can see this stop hunt taking everybody out and confusing them. So people that are scalping, day trading, whatever trading, blah, 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 they see this as a confusionary thing. But then again, people that are trading higher time frame ranges, and they're coming from this to this to this, all they see is that there is again breakout trader, reversal trader, smart money trader. Do you guys see how the cycle is so repetitive? Isn't that crazy? Why? Because the people that now are trading this exact zone, massive one, they are the swing trader. They are the higher time frame trader. So that's why understanding the fractal nature of the market and understanding the different time frames that I stress about so much and I share on my channel is essential for you. Because if you don't understand which part of the market are you in, whether you are an intraday trader, whether you're a scalper, whether you're a swing trader, and what part of that you are taking place into, my man, you're never gonna understand it. You're gonna be always confused, okay? That's why I'm sharing with you and making you easy to understand how you should be able to identify the 4 most important patterns, which we just discussed by now. And you can see that those 4 patterns are the one that literally forms the market. Because remember, I told you earlier that we have different other type of liquidity, such as liquidity people trading with indicators, right? For example, divergence, for example, RSI, moving average. They have their own analysis, and based to that, they place a stop loss in different vague places, right? Then also you have previous day high, previous day low. So eventually what tends to happen is that you have so many type of liquidity happening all over the market, okay? So then you don't know which one to trade anymore, because then at one point you're like, okay, you know what? I'm going for, 1 second, I'm going for this equals over here. Now, you know what? I'm going for this trend line over here. Or you know what? I'm going for this breakout over here, and you get confused. So what is exactly you should be doing? Okay, in my opinion, I'm telling you guys, I made this channel to make trading easier for everybody, especially from our smart money concept trading. That's why I share what I share. And trust me, my strategy is so mechanical that it can literally change your life. Okay, but I know you guys love complicating your life. I know you guys love liquidity. I know whatsoever. And many of you requested me to explain you, help you to understand how you can master that. Here is one of the biggest tips I can give it to you. Let's go back to our drawings. Okay, so what is it? We have left over here, right? So in this drawing, over here, you got 4 patterns. And I also say to you here, all the other variables of liquidity that you have over there, right? So what exactly you can do as a trader, what you should be doing, again, is that you, now that you know this 4 key pattern that happens 24/7 in the market, you need to focus and understand which of these patterns are the one that you personally, based on understanding of the market, you see they are rated the most, and you understand that, okay, after, let's say that there's a breakout, in reality it's a stop hunt, then I'm taking the trade. If you see that you're trading that and price takes out that liquidity and gives you a massive reaction away and it allows you to take a trade, giving a decent RR, then just focus on that. Just focus in 1, 2, or 3 type of liquidity. What do you mean by this? For example, people that trades intraday session like session liquidity or daily liquidity, weekly liquidity, they just focus on 2 type of patterns. They focus on, for example, New York session liquidity or London session liquidity, or for example, daily high liquidity, daily low liquidity. So they just trade only that. Now, the reason why I share with you all of this is because I want you guys to have the exact knowledge that I have it when I started mastering all of this. Because once I started noticing and I started asking myself this question, liquidity is everywhere. How do I know which one I should be trading? Also, what exactly is the definition of liquidity? How do I see that? Well, now I showed you just based on the simple example of this unique price action that goes all along through the whole chart over here. So for example, going back to what I was just saying, is that let's say here we have a trend line. So if you see this type of break to the upside, right? And you are like, okay, the only type of liquidity I'm trading is just a trend line liquidity. Okay, so for example, let's say there is a price action over here, right? And then you just let me remove this one, all right? So then you're like, okay, price is doing this, and it comes over here, and then out of nowhere, if you want to just trade that pattern, you see the end of the liquidity, what that happened over here, and then you're like, okay, that's the one I'm taking. From here, now I'm selling it, because that's the exact thing I want to see every time happening, exactly as it happened over here, right? Or differently from a breakout trader, or differently from also smart money trader, and so on. So choose 1, 2, 3 pattern type of liquidity you want to see, and you're like, okay, look at this. Oh my gosh, I just look at this. Yeah, check this out. Like, this is the fractal nature of the market. That's what I was talking about. Look at this. You got what? Trend line over here. Look at this. The cleanest trend line over here, right? You got a specific build up. You want to call it whatever way you want to call it. Look at this. And then out of nowhere, boom, it shoots all the way up here. Takes this liquidity, and that's what you get for a sell. You guys get me what I'm trying to say? You guys following through what I'm telling you? And then the same goes also for breakout trader, smart money trader, and so on, and so on, and so on. Now, I know I mentioned it about this, what's it called it? The smart money liquidity, and I told you this is a scam. You guys have to be very cautious on that, and understanding the true nature of this. If you want to know more about this, if you guys want to know more what exactly is this type of particular liquidity, then make sure that you watch these videos over here, the last video I uploaded, and trust me, you're going to have a proper, tangible explanation and breakthrough of why you should be cautious about the smart money trap and how you can use them effectively. This being said, I'll see you to the next one.